Good day everyone, we are the group 10 and our topic is all about taxation. But before we proceed, I'm going to introduce myself. My name is Jenny Zarvaitos and I am the first reporter. And the second reporter is De La Cruz Alvi, and the third reporter is Labrador Julesa, and the fourth reporter is Lera Ogfresi, and the last one is Barrera Melissa. So let's proceed. So here are the objectives of our report. First is to know what is taxation and its role to our country. Second is what are the importance of taxation. The third one is what is the purpose of taxation. And the fourth one is what are the different types of taxation. Key takeaways. Taxation occurs when a government or other authority requires that a fee be paid by citizen and corporation to that authority. The fee is involuntary and, as opposed to other payments, not linked to any specific services that have been or will be provided. So what is taxation? Taxation is a term for when a taxing authority, usually a government, levies or imposes a financial obligation on its citizens or residents. Paying taxes to governments or officials has been a mainstay of civilization since ancient times. So in short, taxation is a practice of collecting money from the citizens based on their earnings and properties, or it is a payment to be paid by the citizens who are liable to pay it.
When did taxations begin in the Philippines? It all started from the ancient Filipinos, where they paid their taxes to their dato or the chiefs for the protections they gave to them. The tax was termed buwis. Everyone is required to pay their taxes except for the dato chieftain's household. Punishment for not paying taxes was also implemented on this period. The arrival or invasion of the Spanish people from 1521 to 1898 give the Filipinos modern concepts of taxation, wherein 16 years old to 60 years old were forced to pay tributes or tributo to the King of Spain through the colonial government, worth 8 reales or 1 peso per year. But there are also other forms of payment like gold, chickens, textile, rice, and forced labor or polo y servicio. In 1884, the tribute was abolished and was replaced by the cedula or cedula, a certificate identifying the taxpayer that needs to be carried all the time. If someone is not able to present their cedula to a guardia civil, they will be imprisoned for being indocumentado, which means that they lack valid documents or legal personnel identifications necessary to prove their identity. It was followed by the 1987 Philippine Constitution, stating that it sets limitations on the exercise of the power to tax. The rule of taxation shall be uniform and equitable. The Congress shall evolve a progressive systems of taxations wherein the Philippines covers both national and local. National taxes refers to a national internal revenue taxes imposed and collected by the national government through the BIR or the Bureau of Internal Revenue, while the local taxes is those imposed and collected by the local government. Lately, the 16th President of the Philippines, President Rodrigo Duterte, implemented the Train Law or Tax Reform for Acceleration and Inclusion, which was signed last January 1, 2018, which seek to the correct number of defenses in the tax system to make it simpler, fairer, and more efficient, wherein the rich will have a bigger contribution and the poor will benefit more from the government's program and services. The term taxation applies to all types of involuntary levies, from income to capital gains to state taxes. It is usually referred to as an act. The resulting revenue is usually called taxes. The policy of taxations in the Philippines is governed chiefly by the Constitution of the Philippines and Three Republic Act. Taxation is differentiated from other forms of payment, such as market exchanges, in that taxation does not require consent and is not directly tied to any services rendered. The government compiles taxation through an implicit or explicit threat of force. Taxation is legally different than extortion or a protection racket because the imposing institution is government, not private actors.
Who is responsible to pay taxes? Income tax is a tax on a person's income, emoluments, profits arising from property, practice of profession, conduct of trade or business, or on the pertinent items of gross income specified in the Tax Code of 1997 Tax Code as amended, less the deductions of any authorized for such types of income by the Tax Code as amended or other special laws. Residents and non-residents. Every individual citizen alien residing in the Philippines and every non-resident alien engaged in trade or business in the Philippines who is receiving income, whether it constitutes the sole source of their income or in combination with salaries, wages, and other fixed or determinable income, is required to file an income tax return on or before 15th of April of each year covering income for the preceding taxable year. The tax runs from the 1st of January to the 31st of December of each year. The tax return to be filed declares the total amount of income earned by the individual and any unpaid tax is settled at the time the return is filed. A citizen or a resident alien is not required to file the annual individual income tax return if they qualify for the substitute filing. A non-resident alien engaged in trade or business, however, does not qualify for substitute filing. Substitute filing applies to citizens or resident individuals who meet all the following conditions. The employee receives purely compensation income. The employer files the annual information return of income taxes withheld on compensation and final withholding taxes, BIR form numbers 1604C and 1604F. The employer issues the certificate of compensation payment or tax withheld, BIR form 2316 to each employee.
In this video, we are going to talk about what are the different types of taxation. So, the first type of taxation is the income tax. The term income tax refers to a type of tax that governments impose on income generated by businesses and individuals within their jurisdiction. By law, taxpayers must file an income tax return annually to determine their tax obligations. Income taxes are a source of revenue for governments. Income taxes are typically progressive, meaning that higher income earners are taxed at a higher rate than lower income earners. The amount of income tax an individual must pay is based on the individual's total income, filing status, and other factors. Governments use income taxes to fund public services such as education and infrastructure projects. The second type of taxation is the corporate tax. This type of tax is imposed on the profit of a business. The corporate income tax rate is typically a fixed rate that is determined by the jurisdiction in which the business is located. Businesses are required to pay income tax on the income that generate, as well as any other taxes that may be applicable. The third type of taxation is the capital gains. A tax on capital gains is imposed in any capital gains or profits made by people or businesses from the sale of certain assets, including stocks, bonds, or real estate. This means that on the capital gains tax it is a tax on the profit made from the sale of an asset. It is designed to capture some of the gains made from the appreciation of the asset, such as stocks, bonds, or real estate. It is imposed on the difference between the sale price of the asset and its original purchase price. The fourth type of taxation is the property tax. A property tax is assessed by a local government and paid for by the owner of the property. This tax is calculated based on property and land values. The primary source of a property tax is to generate revenue for the local government to fund public services such as schools, roads, police and fire departments, and parks. The tax is usually collected annually and is based on the assessed value of the property. Property owners must pay the tax or risk facing penalties or a lien on their property. The fifth types of taxation is the inheritance tax, a type of tax levied on individuals who inherit the estate of a deceased person. The tax is calculated on the value of the assets or property passed onto the inheritor from the deceased person's estate. The purpose of the tax is to raise revenue for the government and to prevent large concentrations of wealth. And the last types of taxation is the sales tax, a consumption tax imposed by a government on the sale of goods and services. This can take the form of a value-added tax, or what we call VAT, a goods and services tax, GST, a state or provincial sales tax, or an excise tax. Consumption taxes are generally regressive, meaning that they can take a greater proportion of income from low-income households than from high-income households. This is because low-income households have a higher proportion of their income spent on goods and services that are subject to the tax.
The continuation of our report. Why do we need to pay taxes? So the reason why we need to pay taxes is to fund government activities and public services. For example, infrastructure such as roads and highways, healthcare such as public hospitals and health clinics, education such as schools and libraries, security services such as the Coast Guard, police service, and the army. And the last one is salaries of government workers. The main purpose of taxation is to raise revenue for the services and income supports the community needs. Public revenues should be adequate for that purpose. Tax should, as far as possible, be levied equitably according to ability to pay. The basic function of taxation. First, the most basic function of taxation is to fund government expenditures. Second, varying justifications and explanations for taxes have been offered throughout history. Third, early taxes were used to support the ruling classes, raise armies, and build defenses. Often, the authority to tax stemmed from divine or supernatural rights. And that would be all. Thank you.